Ladies and gentlemen, good day and welcome to Godawari Power and Ispat Limited Q3 FY24 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you and over to you, ma'am.
Thank you, Viren. Good afternoon, everybody, and welcome to Godawari Power and Ispat Limited earnings call to discuss the Q3 and 9-month FY24 results. We have on the call Mr. B.L. Agarwal, Managing Director, Mr. Abhishek Agarwal, Executive Director, Mr. Siddharth Agarwal, Executive Director, Mr. Sanjay Bothra, CFO, and Mr. Dinesh Gandhi, Executive Director. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Dinesh Gandhi to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Good afternoon, ladies and gentlemen. Thank you for joining us today for the Q3 and 9 months FY24 earnings Concall for Godawari Power and Ispat Limited. Our financial results and earnings presentation is available on our website as well as on the stock exchange's website. I believe you have had a chance to review the same. I will take you through the results and the recent updates from the company, post which we will have the question-answer session. I am pleased to announce that GPL has demonstrated robust financial performance in Q3 and 9 months FY24, driven by increased production volume of value-added products, higher realization of iron ore pellet, cost saving achieved through the year-on-year reduction in power and fuel costs. Not only this, I am happy to share that GPL has received the environmental approval for capacity expansion in the pellet plant, and company has decided to increase the plant capacity of integrated steel plant to 2 million ton instead of 1 million ton proposed earlier. Before discussing on the financial performance in detail, I would want you to appraise the strategic updates for the quarter and till the date. The company has received consent to operate the sponge iron plant at an enhanced capacity of 595,000 metric tons from 495 metric tons earlier. We have been awaiting this approval for last more than 1.5 to 2 years, and we are happy to announce that this has been now received. Based on the same, we have increased the guidance for our production volume in the current year itself to 590,000 tons. GPL has also received consent to operate the steel melting shop at a higher capacity of 525 metric tons from 400,000 tons at the existing plant at Siltara, Raipur. The enhanced capacity of billet is operational, and based on the same, company has increased the guidance for the production of steel billet to 475,000 tons for the current financial year. Due to the consent for higher production of steel billet, sponge iron manufactured by the company shall be 100% captively consumed, which will lead to value addition and improvement in operating margins. The additional power required to operate the higher capacity in steel melting shop will be made from the additional power being generated from recently commissioned higher efficiency power generating turbine and solar project commissioned in the recent past. Overall, the increased capacity is value additive. Coming on the updates on the capex plant, GPL planned to increase more than double the mining capacity at Aridongri mine, expanding it from 2.35 million ton to 6 million ton per annum. The enhanced mining capacity shall be operational on receipt of environment clearance, and production shall be gradually increased over the next 1 year. The company has already filed a revised mining plan for increased mining capacity of mine, and TR is also received. The public hearing is expected to be concluded in Q1 FY25, post which the environmental approval is expected to receive. GPL is also setting up a beneficiation plant at Aridongri mine with a capacity of 6 million ton. The estimated capex for the same is 200 crore. This will be set up in 15 months after the receipt of environmental approval. GPL had earlier planned to increase the pellet capacity by 3 million ton. This will be done in two phases. In first phase, pellet capacity will be increased by 2 million ton, and another 1 million ton will be done in the phase 2. Capex requirement for phase 1 expansion is 600 crore. As mentioned earlier, I am delighted to inform you that environmental approval for the same has been received, and project is estimated to be completed in Q1 FY2026. Further, GPL has decided to increase the capacity of proposed integrated steel plant to 2 million ton instead of 1 million ton proposed earlier. Based on the detailed diligence done by the company, capex for the integrated plant has been revised to 6,000 crore. For 2 million ton. The revised cost does not include the coke oven plant and thermal power capacity required for the project. The coke oven requirement for the project will be made from procurement of coke from market in place of coal and converting same into the coke. Similarly, electric power requirement for the project will be sourced from the solar power to be set up under the group captive arrangement with the third party. It has been planned keeping in mind the lower carbon emission and lower capex. The public hearing for the project has been completed and environmental approval is awaited. It is expected to be commissioned in 36 months upon receipt of environmental approval. GPIL is dedicated to minimizing carbon footprint and actively pursuing the objective by setting up 4 solar projects to establish the combined power generating capacity of 173 megawatt up from 155 megawatt proposed earlier. As of today, 145 megawatt solar power capacity has already been commissioned, and we are actively contributing to the cost saving and reduction in carbon footprints. I am happy to share that out of 145 megawatt, 20 megawatt solar power plant of Hirapero was commissioned in December, taking the total capacity in HFL to 52 megawatt, and 23 megawatt of solar capacity to meet captive requirement of power at Aridogri mine has been commissioned yesterday evening only after the board meeting. The balance solar power capacity remaining could not be commissioned because of the non-availability of contiguous land. Company is making efforts to purchase the land, and same will be installed and commissioned in due course. Another 20 megawatt solar power plant that is to be set up to address the captive power requirement of fabrication and galvanizing unit is expected to be completed in June 2024. Capex for the same is 80 crore, out of which 21 crore has already been incurred. This will result in cost saving by 3 rupees per unit, besides reduction in carbon footprint. Further, a new high efficiency 48 megawatt turbine generator has been commissioned and duly synchronized with the grid in December 2023. The existing oil turbine has been replaced with this new turbine, which is advanced and efficient in generating power and is expected to generate additional 7 to 8 megawatt electric power without any additional fuel consumption. The additional power generated from the new turbine will be used for captive consumption in steel. Is being used in captive steel plant to replace the grid power. Debottlenecking capex for rolling mill modernization is progressing as per schedule and is expected to be completed by Q4 FY24. This will help meeting the company's requirement of steel in the fabrication and the galvanizing unit. Shareholders' approval for grant of 28 lakh stock options has been accorded in December, and subsequent to which company has granted over 8.8 lakh ESOP to the eligible employees in January 2024. Coming on the financial performance, operational performance, I am delighted to mention that GPL has achieved highest ever production volume in steel billet, ferroalloys, power on quarterly basis, and for sponge iron billet and power in 9 months basis. One of the major competitive advantage of GPL is captive iron ore mines. The captive iron ore landed cost for our GPL is 2,800 crore from the mines as compared to market price of over 6,000 rupees a ton. Iron ore mining production increased by 9% quarter-on-quarter basis to 565,000 tons in Q4 FY24, though it dropped 13% YOY because of reduction in production volume in the Buriativu mine. Coming on the sales volume numbers, iron ore pellet sales volume dropped 15% quarter-on-quarter, because of the piling up of certain inventory and the plant and at the port, which has been exported in January 2004. and the same will reflect in the sales volume of Q4 FY24. Production volume across division increased on YOY basis. The detailed production and sale volumes are shared with the investors in investors' presentation. Realization for pellet increased 27% and 6% to 10,505 on YOY basis and quarter-on-quarter basis. On 9 months basis, realization of pellet increased by 11% to 10,205. Realization for other products showed a decreasing trend on 9 months basis. The cost for iron ore procured from the market and the coal was higher on quarter-on-quarter basis. Coming on the consolidated financial performance, the revenue for the quarter showed marginal increase of 1% and decrease of 11% to 1,309 crore on quarter-on-quarter basis and YOY basis. The reason for decrease in realization...
The person you are speaking with has put your call on hold. Please stay on the line.
Lower owing to the piling of the stock at the port. EBITDA increased by 80% YOY to 331 crore owing to higher realization of iron ore pellet in Q3 as compared to Q3 of FY23 and saving in power and fuel cost. EBITDA margin increased to 25% as compared to 13% in Q3 FY23. Profit after tax increased to 229 crore, up 79%. PAT margin also increased to 17.5%. In Q3 FY24. Company continues to remain debt-free. The net cash on the balance sheet of the company as of December 23 is 768 crore approx. Coming on the 9 months performance, the revenue during 9 months dropped by 12% to 3,926 as compared to last financial year due to falling realization across the product range except the iron ore pellet. Our EBITDA increased by 13% to 999 crore in 9 months FY24 because of the increased realization in pellet and cost saving in power and fuel. EBITDA margin increased by 25% to 25% from 20% in 9 months 23. PAT increased by 15% to 717 crore in Q3 in 9 months FY24. Now coming on the market outlook. On international front, global iron ore prices surged to $144 ton in January, up from $103 at the start of the year, and currently ruling at about $133 a ton. Import in China were strong. There was no explicit steel production cut announced in China. At the same time, China domestic iron ore production lagged. The World Steel Association is forecasting steel demand to grow by 1.8% to 1,815 million tons in 2023, another 1 million tons in FY24. This argues well for demand for iron ore as well as expected the prices both well around the current level. On domestic front, iron ore prices, as indicated by NMDC, 64 Fe fines have increased significantly to 5,110 rupees currently from 6,610 in January 23. Prices have recovered well from the low seen post imposition of export duty and are now closer to high seen in calendar 22. On the other hand, pellet prices after touching a low of 8,800 in July 23 has increased to over 10,000 rupees a ton in December end, and is currently at about 9,800 rupees a ton. Given the positive steel demand outlook, pellet prices should remain supported at the current level. India remains one of the bright spots globally for steel demand. While the Steel Association forecast India's steel demand to increase 8.6% in 23 and another 7.7% in calendar 24 as compared to 9.3% in calendar 22. Indian government push for infrastructure can be seen in recent budget with 11% increase in capital outlay to 11.11 lakh crore, argues well for the steel demand in the country and especially for the long steel product. In conclusion, I would like to emphasize that GPL is strong net cash balance sheet, competitive edge provided by its captive iron ore mine, production of high-grade pellet, over 2 decades of industry expertise, and dedicated and forward-thinking leadership, diligent employees, and dedicated and forward and support from all stakeholders bodes well for the company's growth in future. With this, I conclude my opening remarks, and we can now open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Jatin Damania from Swan Investment Managers. Please go ahead.
Good afternoon, and thank you for the opportunity. Am I audible?
Yes.
So, just wanted to understand, now since you have got a consent to operate and we will be consuming entire sponge captively, but want to understand more on our expansion plan, because if you highlight the rationale, we are dividing a pellet into 2 phases, because earlier we were supposed to do a 3 million ton at one go. Now we are planning to do 2 and 1. So what is the rationale behind doing this?
Yeah. So, hello.
Yeah.
Abhishek, you are taking?
Yeah. Good morning.
Okay.
So the
Good morning.
that, splitting the capacity in 2 phases, we want to
Your voice is not clear, Abhishek.
Your voice is breaking between.
Can you hear me now?
Yes.
Yeah, so the rationale is, we want to integrate the current capacity with our iron ore mines, so that, we are able to maximize the production of high grade, because, buying iron ore fines from the market and then making pellets, in the long term, I don't see it's commercially viable anymore with the, the capacities of parity in India and, the supply of iron ore. So to integrate, the iron ore mines with the pellet plant capacity, we decided to, reduce the capacity from 3 billion. And then going forward, when we're able to enhance further capacity in iron ore mining, we will probably go for another pellet plant. That's the only rationale behind it.
And what is in terms of the mining approval for the expansion, where are we on that? Because, couple of quarters has been done that we wanted to expand it to 6 million ton, and we are waiting on the...
We should be able to receive the environmental approval in Q1 of next financial year. And once we receive that, we should be able to ramp up the capacity, and then in the end of the next financial year, we should be able to touch the rated capacity of 6 million tons.
So that means in FY26, we will be at 6 million tons of the mining capacity in terms of the production. FY25, we will be somewhere around 5, right? If we get an approval.
Yeah. Everything is in line. So probably FY25, we should be able to ramp up to the levels of say 5 million, and then FY26, we should be able to, ramp up to 6 million tons.
And by that time, our pellet will also be in operational.
Exactly. So that is the entire thinking behind, reducing the pellet capacity from 3 to 2 in the phase 1.
And last 2 questions. One on Boria Tibu. Where are we? What is the status? Where are we? And in terms of the beneficiation, are we looking at setting up anything on the Boria Tibu?
Yes. They've already started working on the Boria Tibu mines. We should be able to apply for the environmental approval very soon. And once we have that in hand, we will start installing the plant. But, looking at the current scenario, I think at least next 36 months is bare minimum where we're looking at Boria Tibu to commence the operations again.
So but as of now, we don't have any impact on our performance, right, from Boria Tibu, because the mine is not working.
So in terms of financial performance, Boria Tibu performance, there will be no impact on the Boria Tibu performance.
Okay. And last questions on our capex. Now, since we have highlighted that we will be doing 6,800 of the capex, so can you highlight what are the products that we will be producing from the integrated steel plant? How are we going to fund this capex, and what is the capex plan for FY25-26?
See, on the new greenfield, we are focusing only on the flat products. We are not thinking of going to long products anymore. We are all into long products. And the way Indian steel is, shaping up, we think the demand for the flat product, will be on the increasing trend. So we are only focusing on the flat product. On the capex side, as we already declared, with the mining and the bottleneck and the new pellet plant, 1,000 crores. So that will be done from the internal accrual. And for the greenfield also, depending on the final capex, once we are able to start placing orders, we are confident we should be able to, do it.
Abhishek, we lost you in between.
We are confident we should be able to, fund all the capex from the internal accrual only. The current pellet capacity, the mining expansion, and the further greenfield.
And the capex for FY2025-26 roughly?
For 25, the capex should be about, so for the mining and the pellet should be about 800 crores. And after that, in 26, we should be able to start the new greenfield steel plant.
So that will be near about 1,500 crores, right?
Yes.
Sure. Thank you, Abhishek. That's all from my side. I'll come back in the queue if I have more questions. Thank you and all the best.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Aditya Velekar from Axis Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, on the steel plant, we have announced the incremental capacity. So just wanted to understand from coking coal perspective, what will be our strategy means, and what is the normalized EBITDA per ton you expect from the plant in future?
See, on the coking coal front, given the current scenario, we have no plans of putting up a coke oven. We will directly import coke, and use in the blast furnace. The rationale behind this, there are a lot of capacities in Indonesia which are, only making coke. Indonesia has, low grades of, coking coal. So a lot of investments are done in Indonesia, and our current capacity stands at about 20 million ton. And a lot of imports are already happening into India of, coke. So instead of putting up a coke oven, we want to save on the capex and directly import coke and use in the blast furnace. That is the strategy at the moment.
Understood. And can you come again on the capex spending profile for coming 5 years? If you can just repeat that, I lost that part.
Okay, so for the pellet capacity and the mining expansion, it's going to be close to about 800 crores, which is already underway. And for the greenfield, when we charge about 6,000 crores, of course, this will be, closed down once, we are able to finalize the capacity and start taking orders. But so going forward next 5 years, I think we should be somewhere about 7,000 crores.
Understood. Thanks a lot. I'll get back in the queue.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Hi, sir.
Hello.
Hi, Vikas. Yeah.
Hi, sir.
Go ahead, Vikas.
Sir, just wanted to understand the spot the pellet steel prices versus the 3Q average, how much up or down they are?
Can you please come again? You're not audible.
The spot prices versus the 3Q average, how much up and down they are?
So the current spot prices in the domestic are hovering about 10,000 rupees, and it is in line with the the quarter average. So not much change.
No, that is for the pellet. The steel products, the prices are down as of now.
Yeah, the quarter average was about 41, and currently the prices are about 39,000.
Understood, sir. My second question is, given the current domestic prices as well as export pellet prices, are we looking at the export more, or we would like to sell in the domestic more? So how the math is setting up right now?
See, we
what is the difference between the net realization between these two at this point of time?
All right. So we did start exports in the month of December. We have already done a couple of shipments. But, China is on holiday right now, and as you all know, China, the iron ore prices have come down by 10%, in the last few weeks, because the China market is quite weak. So currently we are focusing on the domestic market because the realization is much better. But as and when the opportunity presents, we are always open to start exporting again. So depending on the realization, we are open for both the markets, export as well as domestic. Eventually, it's about selling at the best price possible.
Understood. And sir, just wanted to understand the thought process behind not going after the even power plant and tying up with the third party for the larger plant. So is it something to do with the capex cost or the environmental clearance related problem? Because
No.
usually it is advisable for us to have everything in-house for the better margin. So how the margin dynamics sets up in that?
So there are two scenarios. One is, of course, the carbon emission part, with the government of India focusing on decarbonization. So, we also want to, be on the same path. That is one of the reasons. Secondly, is on the commercial side. Today, operating a coal-based power plant where you don't have any captive coal mines and you picture everything from the open market, the power cost varies from, anything between 4 to 5 rupees unit on a yearly average. And when you do a solar, the solar plant, the yearly average is not more than, 3.5 rupees. So commercially also will be saving on the operating cost, and on the carbon side also will be saving on the emission side. So both aspects were considered, and that's why we took the decision.
Understood, sir.
Yeah.
And sir, the pellet price outlook as per you, because I think that the yesterday pellet prices have actually gone down in the markets. So
it's okay, 200, 300 rupees. That's what I'm saying, 200, 300 rupees, plus minus depending on the steel market and the domestic demand, it doesn't make a difference. And I've always been, mentioning as a company, with the volume we have, we always have order book of close to 30 to 45 days. So sitting in Feb, I can say we almost covered till March. So the prices going down currently doesn't impact our numbers for this quarter at least.
So just one last question regarding Boria Tibu. Usually there are themes of good grade or low grade on the mining side. So have we done any survey which would give us an idea that whether the entire mine is of low grade or there's just we encountered a ore body which is of lower grade and then we could...
No. See, of course, we have been running the mines for past few years. This year only we decided to, close the mines due to commercial viability. So we know all the analysis, we know what grades are available. So the reason is because the overall quality of the mines is on the lower side compared to Godawari. So the best way possible is to, beneficiate, make high grade from low grade and then bring it to the plant for usage. So that is the reason we have closed the mines and we are going for beneficiation in the Boria Tibu mines as well. It's a well thought decision, looking at the commercial viability of the mines and the longevity as well.
Understood. So the entire mine is actually of lower grade.
The average, the average is on the lower side compared to Godawari.
Understood, sir. Thank you. That's all from me.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rakesh Roy from Omkara Capital. Please go ahead.
Yeah, morning, sir. My first question regarding, sir, your numbers for Q4, Q3, FY24. Your top line is nearby 1309. So out of 1309, how much is the other operating income, sir, in this one?
So there is no other operating income. Other income is shown separately in the results, which is about 20 crore.
Okay.
Yeah.
Okay. So when I calculate your sales number with your realization, it's come nearby 1262. So there is difference between the numbers you have provided me or the numbers I have calculated. Your sales volume multiplied by realization.
Okay, no, the overall sales includes the sale of certain byproducts, scrap, etc., and which is not, is part of the investor's presentation, and therefore there is a difference.
Okay, so compared to the last year, it's a big number, because if I check your number is, top line is down by 10-11% year on year, but when I calculate from your sales volume or realization is up by 9%. So there is
the realization is up on 9 months basis, but your steel plant realization are lower as compared to the same period last year.
Okay, so sir, same period last year, scrap sale is more, sir? Same period last year? Is it high scrap sale?
There was a trading sale last year.
Okay, trading sale last year.
There was a trading sale, some quantity last year.
Okay. Right, sir. Right, sir. So my next question is regarding, sir, your margin part. Just you say that due to the rise in coal prices and iron ore, the margin is down. So, sir, in January, coal prices has come down. So can we assume that for Q4 on next year, margin will improve from here onwards?
Yes, definitely, the impact of that will be reflected. Whatever price changes are there, either in finished product or the raw material, the same will reflect in the financial numbers.
So we can expect from Q4 gross margin will improve?
No, that will depend on the, realization of other products as well.
Okay. Okay.
But just to be specific on the coal side, because we are importing coal for a DRI operation, and with the current inventory, so we always have, inventory of, close to 45 days to 60 days, in transit material. So the coal prices impact can be seen in the balance sheet going forward. So I would say Q1 of next financial year, you can see the impact of the coal.
Okay, agree, sir. Agree. So to Q1 FY25, we can see the numbers.
Yes, correct.
Yes. Next question regarding, sir, you are just recently you have put, sir, you have commissioned nearby 25 megawatt solar power. So can we assume, sir, your energy cost will come down in Q4?
Yes, definitely.
Partly will come down in Q4. Partly will come down in Q4, and then the full impact can be realized from Q1 of next financial year.
Okay, Q1. And how much is your currently energy cost in terms of rupees, and after how much is come down?
See, so currently...
yes, go ahead, Abhishek, go ahead.
So currently our average energy cost per unit should be somewhere about 3.75 rupees, and going forward it should be somewhere about 3.5 rupees. And it's come down from about average of 4.75 rupees. So we have already saved 1 rupee a unit.
Okay, we can save 1 rupee a unit, sir.
At the moment, and going forward, once the pending capacity of solar gets commissioned, there will be further reduction in the per unit cost.
Agree, sir. Regarding, sir, your the next question is, this just you mentioned that you have exported some pellets in December time. So which country you have exported, sir? Pellets?
At the moment, all exports are going to China.
Oh, China, sir.
Yes.
So any export order for Q4 also? You have any?
Yes. We already are executing one more order, which will happen in end of this month. And discussion already going on for the next month and future deliveries.
Okay. And we can assume that pellets realization will remain same 10,500 or will come down?
It's difficult to say because you don't know where the market is going to go, because the steel market is quite down in India, the China has gone down. But Q4 we can expect similar realization, and in Q1 we don't know where the market is going to go. This still is sitting in Feb. So it's difficult to assume what will happen in Q1 of next financial year.
Agree, sir. So next question is, you have the increase your for greenfield from 1 million ton to 2 million ton, sir. Any realization behind what you are looking, why you are increasing, or what you are looking for to 2 million ton, and which flat product and which market you are targeting, sir, by flat product?
See, to be honest, the rationale behind increasing capacity from 1 million to 2 million is because, earlier we were thinking of getting into long. We were, exploring all the opportunities, long, flat, round. But we have realized, the flat product demand in India will keep going up, especially in the automobile sector and, the pipe segment. So keeping that in mind, we decided to increase the capacity, and we are only focusing on flat products. We have dropped the idea of getting into long any further.
Okay, okay. So which side you are just mentioning you are focusing on auto and pipe like that, no?
Basically, we basically focusing on the HR coil. Basically focusing on the HR coil.
HR coil.
Yeah.
Okay. Currently, are we making any long products, sir, like a TMT bar we are making?
No, currently we are already making wire rod, which is the category of long products. We are not making TMTs, and we have no intention of getting to TMTs now. We'll keep making wire rods in the current premises, and the new plant will focus on flat product, the HR coil.
Okay, HR coil, sir.
Yeah.
Right, sir. And what is your, sir, outlook regarding, sir, demand scenario, and if you say the overall macro demand, macro outlook on in the steel demand, sir?
Currently, the demand is quite weak, with the generations coming up. But, but the Indian steel consumption and the steel production also going up, on month and year-on basis. So we are quite positive in terms of the growth going forward.
Right, sir. Thank you for my side, sir.
Thank you.
Thank you. The next question is from the line of Ketan from KP Equities. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. First question on the integrated steel plant. So there has been a lot of back and forth with regards to the steel plant. So earlier we planned a 2 million ton plant, then we scrapped it. Then we decided to go to pig iron plant, then 1 million ton, and then now 2 million ton. So what is the thinking behind this? And do we require any further approvals different from the one that we had a public hearing for recently?
I totally agree with your view. We have been, going back and forth in terms of, capacities and, the future expansion. But after a lot of deliberation and, studying the market, we finally freezed on the 2 million capacity, which will be focusing on flat product, as I just mentioned. And depending on the capex, as I said earlier, mostly we'll try to do it from the internal accrual.
Okay, all right. And you mentioned HR, right? We are focusing on HR part.
Yes, correct.
Okay, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ganesh from SGK Advisors. Please go ahead.
Sir, am I audible?
Yes, Mr. Ganesh.
Yes.
Please go ahead.
Okay. Thank you for the opportunity. So I'm looking at the profit and loss statement and looking at the year ago quarter, basically Q3 23. The purchase of stock in trade, there's a difference of 220 crores improvement this year, which looks like it has contributed majorly to the profitability. So, I mean, what are the components into the 220 crore? And my question is it also sustainable?
The profitability, if you see as compared to last financial year, the same period, the profitability has gone up mainly because of the, 2-3 reasons. Number one is increase in the, selling price of the iron ore pellet as compared to last year. It was more about 8,500 something. It is around 10,200. Similarly, the production volume across the division, especially in sponge iron and steel billet, has gone up. Even ferroalloy, some production volumes have gone up. And the third component is saving on the iron and fuel cost. As you are aware, we have set up a lot of solar capacities over a period of last 1 year, and one by one it is getting operational. So all those factors are leading to, cost saving and therefore higher profitability. Is it sustainable in the future? We believe so. It is sustainable in the future. The only caveat is how the steel market and the prices would behave if somebody else is the prediction. Otherwise, definitely it is sustainable.
Okay. So just one more question. Thank you. The steel mint pellet index, it used to be a good proxy for tracking our pellet realizations. But
yes,
in the last 2 quarters, our pellet realizations are diverged towards the upside. So is it mostly based on the higher quality pellets that we are manufacturing and selling?
Correct.
Yes,
so steel mint doesn't track that index. Correct.
Okay. Thank you. That's all from my side.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Aman from Augmenta Asset Managers LLP. Please go ahead.
Yeah, hi Siddharth. Actually, can you throw some light on the iron ore prices? Because recently, since last few months, we have been seeing that NMDC is continually coming up with the price increase. So what is driving up this iron ore price increase, and it is directly beneficial to us? So could you let us understand the dynamics of the market currently, and what are you expecting going forward? What is driving this price increase?
So I'll tell you what is driving the market. See, post-COVID, once, the iron ore mines were auctioned by the Government of India under the new India Act. So, the supply of iron ore from the merchant mining has gone down quite a bit. Now OMC is, can say, the kingmaker in this sector, and OMC does auction every month. They say that, all the prices are, probably decided at India level. the same NMDC is, following the same mode. They have been conducting, e-auctions for iron ore on monthly basis, and basis that they have been, deciding their linkages prices on every month. So, and the second reason is, the demand of iron ore in India is going up day by day because of the increase in production, but the generation from the mines, the iron ore production from the mines is not being able to ramp up at the same capacity. So there is a supply bridge between the demand and supply. That is the reason the iron ore prices have been going up in India. And of course, the China, from $104 to $140, so a lot of low-grade fines below 57 has started exporting from India. So all the big miners like Rumta, they've been exporting the low-grade iron ore, and subsequently they've been raising the prices on the high-grade which is being consumed in India. So these two are the major reasons why the iron ore prices in India are on the upside. And I feel going forward, they will remain tight till the supply end is, able to meet the demand supply.
Okay. So going forward also we are expecting at least for the next 6-7 months.
If you look at the current scenario with China on the highest, number on the high side, I feel the iron ore prices should stay elevated.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Anant Mundra from My Temple Capital. Please go ahead.
Hello. Good afternoon, sir. Thank you for the opportunity. I just wanted to understand how are we planning to source power for the increased mining pellet capacity and also for the new steel plant?
Please, can you come again?
How are we trying to source power for the increased mining and pellet capacity as well as for the new steel plant?
So we have already installed solar in the mining, which we informed the exchange yesterday only. So our mining will be, close to 100% captive in terms of a green power. So that will be the sourcing for our power in the mining side. And on the pellet side also, we are going ahead with the solar plant. We'll be installing another 65 to 75 megawatts of solar that will be, used for running our new pellet capacity. So as we told earlier, we are going ahead with green power in a big way. Of course, for two reasons. One is, of course, the commercial viability basis of coal power plant, and of course, the carbon emission.
So this the cost, the project cost does not include the power cost, right? For the new steel plant, the 6,000 crores project cost that we've given?
It does. So we will be going for a group captive solar plant. So the 6,000 crores which we have been in charge includes the power cost as well.
Okay. All right. That's it from mine. Thank you.
Thank you.
Thank you. The next question is from the line of Kishan Tosniwal from Polar Ventures LLP. Please go ahead.
Yeah, good afternoon. I have one question only. The company is generating good amount of cash flows, which it's good that company is again deploying back in expanding the capacity and all. But generating such a huge cash flow, do you see or is there anything on the board's table that there could be a buyback or there could be a huge dividend that might come out every year, or you might change your dividend policy? That's my only question. Thank you.
See, as you would have seen in our investor presentation and discussions during this call, we are almost on the verge of, substantial increase in our capex outlay over a period of next 3.5, 4 years. And therefore, I believe so. As of now, our dividend policy remains same. And as and when, our profitability improves and, when the capex requirement goes down, we are always open to increase the dividend, or go for buyback or anything. But it seems like in the near foreseeable future, we'll have to conserve the cash in order to deploy the money into the capex plan.
Okay, thank you.
Yeah.
Thank you. The next question is from the line of Raj from Milli Consultant. Please go ahead.
Yeah. Good afternoon.
Good afternoon.
Two questions. One is that this ferroalloy contribution or what is the EBITDA per ton from the ferroalloy operation, as well as also if you can provide the EBITDA per ton on your steel products. I believe that most of the profit is coming from the pellet operation. So whether the investment is giving return on ferroalloy currently or not, and whether how is the price of ferroalloy currently?
See, on the ferroalloy side, the market is quite subdued from, past couple of quarters, The prices, I would say, rather are viewed towards the rock bottom. So currently the prices are hovering between 63,000 to 65,000 rupees a ton for the products we make. And in the only silver lining is, we are able to reduce the power cost by installing solar plants. That will give us additional EBITDA. But in the current market scenario, I feel the ferroalloy prices are quite subdued, and the profitability remains quite constant, going forward.
Can you share?
Unless and until the demand of exports go up, because a lot of ferroalloys are exported from India, because India does produce an extra ferroalloy which is being exported. As you know, the international market is quite weak in terms of steel making, especially to Europe. So if the demand from Europe comes back, the prices from India should go up further.
So, can you share the number basically for steel contribution, if it is possible? Because
no, sir, it is not possible because we are preparing the numbers on a quarterly basis. But if you want to understand on a longer term basis, what we understand is that profitability keeps on changing depending on the price changes in the market. But on a longer term basis, over and above the pellet market price of the pellet, the steel plant does give the margin of 7,000 to 7,500 per ton on a longer term average basis.
Okay, sir.
But it is not possible to share quarter on quarter numbers.
Yeah, this new addition or new plant will be of 2 million ton or 1.5 million ton?
2 million ton.
So 2 million ton steel making, you are projecting 6,000 crores, which looks, because the recent additions by other players have been far higher than this number of 3,000 tons per million ton or 6,000 for 2 million ton.
So, just to add to what you said, probably you are writing the numbers, but as we mentioned, few moments ago, so we are thinking of scrapping the coke oven, which will save us, even a money, plus going for a group captive solar, that also will, help us save a lot of money. So these two accounts will be saving a lot of capex. So that is why we are in charge. 6,000 crores should be enough to, go ahead with the 2 million plant.
Okay, sir. Thank you so much. All the best.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Sir, there was this case in the Supreme Court which is pending, I think, which will probably allow iron ore exports, and they had appointed some committee also on it. Is there any kind of progress on that?
Yeah, so as an association, we have an association called PMI, at national level. So we have been fighting the case as an association, and the next hearing is scheduled end of this month. So we'll get to know once the hearing is done. But what I know is the case. Of course, the case is quite baseless, but still we have to fight it out.
The Supreme Court may overrule the ban. Is there any chance, or that's very?
See, the ban was imposed by the government of India a few months back, and they've already removed the ban. So the only case is can people export iron ore and pellets without any duty? So there is no ban as such. Already people are exporting fines, and already people are exporting pellets out of India.
Okay, so the hearing is this month.
Yep.
And sir, what would be the difference in cost of mining for iron ore between us and NMDC?
Us and NMDC?
Yes. NMDC would be having very old.
I haven't tracked NMDC's numbers, but for us the current landed value to our plant is about 2800.
Okay. Thank you very much, sir.
Yeah. Thank you.
Thank you. The next question is from the line of Nishta Mukherjee from Big Mint. Please go ahead.
Thanks for taking up my question, and congratulations on a good set of numbers. So my question is, could you please elaborate on the breakup of sales target for high grade and the normal grade pellets that you produce, 63.5 and FE66, and how is the response from the overseas market and your outlook for the same for FY25?
See, on the sales side, it remains the same. So we produce about 65% of high grade, 35% of low grade. Out of 65%, close to 50% is consumed for our steel making. So the whole sale of high grade will be about 35%, and 35% will be the normal grade in terms of sale only. And in terms of the interest of overseas buyers, so till now we are only exporting 63 grade pellets, and we are discussing with the European buyers for a 66 pellets. But since they have a long term, with bigger suppliers, so now once March is over, we should be able to, start supplying to Europe market going forward, if the market supports. But at the moment, we are happy selling domestically, and we are able to sell quite easily our high-grade pellets.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Vaibhav Kumar Dubey from Big Mint. Please go ahead.
Hello, sir.
Yes, Mr. Vaibhav.
Thanks for the opportunity. Sir, I wanted to know what is your outlook for FY25 on sales and market for pellet?
See, the sales should remain same what we have been, focusing on quarter and quarter, because the production level changes unless there is a maintenance plan. So we are assuming the sales should be about 4.5 lakh tons for Q1 of next financial year. And the target, depends on the market condition. We're sitting in Feb. What will happen in April, maybe we don't know. How China is going to behave, how the domestic price is going to be behaving. So it's difficult to contemplate and, comment.
Okay, sir. Thank you, and wishing you all the best for future.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ganesh from SGK Advisors. Please go ahead.
Okay. Sir, in one of the previous calls, there was a mention that we will be limiting our sales of sponge iron. So do we have any continuing policy towards that, number one? And secondly, do we have any policy towards limiting the amount of pellets that we sell versus what we produce?
No, there is no limit to it. The reason Mr. Gandhi mentioned is because our steel capacity has gone up with the consent to operate of our, commissioning of new furnaces. So now whatever sponge we produce will be consumed captively to value add in making steel. That's the reason the sponge iron sales will be totally zero going forward in next financial year. And secondly, same is on the, the pellet side. Whatever we produce in the plant, we consume captively. Remaining is sold in the market. So we never reduce the production in terms of steel capacity. Whatever remaining is there, we sell in the open market.
Okay. And with the expanded capacity we'll be having in another 4 or 5 quarters, I'm assuming we'll have a surfeit of pellets available compared to our consumption. So will that be the same case? Whatever is beyond our consumption will be sold?
See, currently my consumption is about 0.9 million tons annually for my DRI, and remaining whatever is produced is sold in the market. With additional capacity coming up, in next financial year, that will also be sold in the market.
Got it. Thank you.
Yeah.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you very much, everyone, for joining, spending your time and joining with this conference call of Godawari Power and Ispat Limited. We are confident that we have adequately addressed all your queries. Should you have any further questions or need additional information, please feel free to reach us directly or contact our investor relation team at Go India Advisors. Once again, we sincerely thank you for all your active participation and unwavering support to the company. Thank you very much. Thank you all.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your line.